Hello, fellow traders. 'Tis I, the Rumpled One. It's Thursday, August 30th, the year 2018. Let's talk trading. Do not F with it. One of the things that I've noticed over the decades I've been trading, and it's been over a decade online, but I've been trading since mid to late 70s. I think it was 77 when I started, maybe 78. Is that traders seem to be the worst, or most traders seem to be, or some traders seem to be the worst when it comes to following directions or a recipe. Before they've even tried it, they're already changing it. Now, not pointing the fingers at anybody, but some of you watching my videos might feel a little sting with that statement. Because you've known me for probably close to a decade, through the internet and forums and that kind of stuff. Maybe even some of you talked to me on the phone, or maybe even seen me when we used to do our pirate gatherings around the world at different locations, usually at a beach where there's sun and water. But that's just the way it is. I mean, I see it almost every day when I go out to a forum, whether it's one of my methods or systems, trading ideas, or somebody else's. Somebody will start a thread with a concept, and usually before the first page of the thread is over, somebody's throwing a different indicator on it. Somebody's building an EA. Somebody else has got something that's got nothing to do with the original thread starters post. And that's just what happens, because it's traders. You just cannot not F with it. So if you want to be successful, learn the method as presented. If you don't believe in it, then you can paper trade it, or use a practice account or whatever. But until you actually learn the method and master it, know it pretty much inside and out, do not F with it. I mean, it's just, and because if you do, then chances are you're not going to make it better. You're just going to make things worse. You're never going to learn the system. So, take it with a grain of salt. It's not my intention to insult anybody. It's more my intention is to, kind of like maybe grab you by the shoulders and shake you a bit and say, hey, wake up, knock it off, but there's my one buddy, I got to get the 2x4 out and smack him upside the head, because he just keeps doing things he knows he shouldn't be doing in the first place. So, for example, when it comes to money and risk management, this is the formula to use. There's nothing to F with. You determine your risk, and then if you know your stop loss, it'll tell you your position size. If you know the position size you want to trade, then the formula tells you the stop loss. There's nothing more to F with. Simple trade here. We're still in the candle body of the previous candle here on the monthly chart. Now, if I remember correctly yesterday, we were up here around the 70s. We were right there, right at the border of that wick zone. You see how price doesn't like to stay in the wick zone even in the month? I mean, now this one, yeah, look at the size of the wick. Yeah, it stayed in it. But, for the months that don't have these super large wicks, like this one, or this one, it gets outside of the wick zone. Actually, I guess maybe I should put the stats up for monthly wicks and see if it's still 77%. I would think it might reduce, but we'll have to put that chart up sometime soon. Weekly, you see we left the wick zone, got all the way up to 82, but now we're right back in that wick zone, and we're near the weekly open, so the buy zone on the weekly would be in effect. And for those of you just tuning in this week, we filled the gap. I believe we filled it on Monday. Daily in the wick zone and out. And you can see here an anemic 46 pips, whereas the euro yen put in 117. I think you guys know what I'm trading next month. 1, 2, 3, 4, 5, 6 over 100 pips on the range. Looking at the buy zone, almost. No, it didn't hit it, so you don't trade it. It's got to hit it. Get in there. If you rush that trade, that's on you. So no trigger there. You had a trigger here. If you didn't scratch that trade, that's kind of on you. Actually, you should have been out here because there's the pivot. Once it got back, you should have just taken that first trade off the table. Here we go again. You know, you're in the zone. Now, if you put your stop here, you would have taken the hit. But then you can see here, you would have more than made up. And you can see here, we're bouncing off of that weekly open this hour. Actually, we crisscrossed it. And you see here, the rat traders, you got a turn trade happening here. But with a 46 pip range, there's really not much to be had. But you can still make a handful of pips. Once again, we took out that pivot. But you see here, we still have this missed pivot right here. But you can see we took that pivot out. Now, if I remember correctly, on one of these charts yesterday, I talked about the big bar. I think it was this one. No, it couldn't have been that one. There was a big bar somewhere. And I said I was looking for price to retrace off that big bar. Or maybe it was that one. I think it was that one. Because, yeah, we were at the 70 level. And I said price should retrace to this big bar. And there you have it. So maybe I'll have to bring out my big bar indicator, but you don't really need an indicator. You can look and see big bars. Right? Price action. You know, one ball at the top. Now let's see. We got to pick it up from what today? I think I scrunched the chart. Yeah, so here we go. One ball at the bottom, green at the line, profit to be had. One ball at the top, red at the line, profit to be had. And you can see two ball at the bottom waiting for the line. I mean, somebody wants to say, oh, that's hindsight. Well, get in there and trade it real time and see for yourself if it works. But you don't have to F with this. This is so simple. You don't need any squiggly lines on the chart. You don't need any supply demand zones. You don't need any support resistance zones. No, you just have simple indicator, 3 levels, easy. Right there. And that I modified. And the sweet spot's gold that I modified. That's it. You don't really need anything else. Yes, I have my spread dots indicator to help me pinpoint the entry. Because if it's selling, I don't want to be going long. If it's buying, I don't want to be going short. In fact, I can just sit here and watch it for a few few minutes, or we can come back to it. See, we got a bunch of selling going on right now. Selling, waiting, trying to make up their mind. In the meantime, we see here candle color at the horizontal line. Once again, something so simple. You're just taking these lines from the previous daily session and you're trading off of them. Or you can use the wick zones, price in the wick zone and out. Once again, something so simple. You don't have to F with it. You just have to trade it. It's all you have to do. You find a pair that works, and then you just stick with it till it doesn't work, till something changes where it's like, you know what, maybe it's time to find another pair. Like the range is starting to tighten up. I guess the volatility isn't in that pair anymore. See, the problem though is, if you think about it, see, if I actually abandon the dollar yen next month and switch over, I could be going from, the dollar yen maybe could be getting more volatile and the euro yen could be getting less volatile. So, that's a chance I'm going to take when I do that. Maybe I'll still keep an eye on the dollar yen. And here we go. Holo setup. Here, let me put this back to M15. And you can see right here, Randy real time, you've got the opportunity. Actually, you kind of missed the boat by a couple of pips. But there's your trigger, 111.346. So yeah, you just give it a few minutes. It just might come back down and give you an opportunity to get in that trade if you want to get into that trade. Inventory reduction bars. You can see we had a short here. And then we had, let's see. Oh, then we had a long trigger here. See, just good for a couple of pips. So, as opposed to the, but when we hit that short trigger, it was a nice short. And you can see here, we got a little buying in there. Waiting again. Let's see, you got a green H1. You got the candle color in your favor. You're swimming against the H4 and D1 tide though. And you can see here there's not much buying. They're just trying to figure it all out. And if anybody is using the spread dots, just let me know how you like it. And you can see here on the tick level, at the tick level, we bid got above the valley of the ask. And good for a few pips, right? Let's see, what level were we at here? 31. You're up a handful of pips. Looking at the Einstein line right here. That could have paid you off about what? 2 pips? Maybe 3 pips. If you wanted to go in heavy and just take a few dollars out of the market, your lunch money. Let's see, now where were we? We were looking hourly chart. Yeah, right here. Okay, you see, we got more buying. We were waiting for the 40 to go long using this simple price action trade. But it doesn't look like we're going to get that trigger. As you can see here, we have gone to red on the H1 candle. So just remember, don't F with it, because it's not what you trade, it's how you trade it. Now, get out there and have a good day of draining the banks.